Okay, guys, thanks for joining us here in the charts. This is the Market Beast, Napoleon Macro. Let's get you guys ready for next week. Monday morning, we should have a lot of activity going on. What we're going to explore in this video is the NASDAQ, S&P 500, the SPY, the SDOW, the Dow Jones. We're going to keep it jam-packed. We also have a bonus towards the end, so stick around for that. And the purpose of this video will be to we're going to take a look at the 3-day candles. These are all active candles that we're going to look at, and they have less than 24 hours to close, meaning that on Monday morning, you should see a lot of fluctuations within this candle that we're looking at. And we're going to look for one specific level on each asset, with the exception of the Dow Jones. But we're going to keep it simple, okay? So let's get right into it, guys. Welcome back, loyal family. If you're new here, we only explore price action. Welcome in all of our new subscribers. Let's go ahead and dive right into the charts here. So today's January the 23rd, 2022, and the previous close. We'll start with the NASDAQ, $14,438.40. Slightly negative close, 2.7% for the day. Okay. All right, guys, remember, let's just keep in mind, we're assuming that there will be some sort of bullish counter move, which I don't think it's going to happen, but I know a lot of people are bullish and a lot of bearish talks going on, so I cannot join the bandwagon. I must show you what to look for just in case the buyers pull some sort of, vicious buying activity. Here comes on Monday morning, okay? So again, we'll start with the NASDAQ, $14,600. 3-day candles, we're going to see an open or a close in less than 24 hours above 14.6. If you did watch our previous video where we had information about the long-term investors and the short-term investors, we did pull out the Fibonacci retracement levels for the long-term investors, and unfortunately on the NASDAQ, it actually closed below that red line, guys, the 0.886. So this is outside of my jurisdiction. I don't know what's going to happen, but again, I know what needs to happen in order to prevent any more downward pressure, and that is to close above 14.6. Let's move it on over to the SPX. This is the S&P 500. Previous close is going to be $4,397.95. Slightly negative close, 1.8% for the day. Okay. So you can see it quite clearly there on the screen. It's going to be 43.9K support level. Well, it should act as support, assuming that the buyers are here and they're going to rescue this market, as the selling pressure looks immense, guys. I'm totally honest, totally transparent with you there. But yeah, if it's going to kind of stop the bleeding, the 43.9 level, that's going to be the line in the sand. And as you can see, the Fibonacci retracement level is the same here at this 0.786 as it came up, down, right? And it looks like it wants to find support. It looks like it wants to find support. Doesn't mean it's going to, but they're attempting to step in there at the 0.786 at 43.9. Okay, let's move on over to the next. Excuse me, partner, enjoying the noise in the background, guys. Different setup here. Let's look at the SPY, the SPY. Previous close, $437.98, slightly negative 1.9% for the day. So this level is going to be, it's just kind of pennies off, right? 43.7, again, active 3-day candle, less than 20 hours to close. We need to get a close above 43.7. I say we, but I'm not invested in, I don't think we're invested in any of these. Yeah, we're not invested in any of these, guys. Just going over kind of the overall macroscopic view of the market to challenge this potential crash that is incoming, and exactly what to look for, okay? So we've gone over the SPY, 437. You want to maintain support above that level, get a nice close above it. And last but not least, we're going to take a look at the Dow Jones here. So as I mentioned, with the exception of the Dow Jones, it's not just one level, it's a range. Previous close of the Dow Jones is going to be $34,265.38. Slightly negative 1.3% for the close. Okay. So I've illustrated this large candle. I think I actually pulled this up for like the weekly candle. So basically, if the buyers are here, you're going to see like this very dramatic, obnoxious candle, like, this, it's a bullish engulfing candle, basically. Okay. Again, I pulled it up on the weekly candle, so if you could see something like, so where'd it go? Okay, sorry, I pulled up the monthly there. Pardon that. All right, so something like this. So this is a successful weekly candle to close. This red candle right here. It's a very aggressive candle, guys. It's a very aggressive control candle. So, and to truly, again, to turn things around, critical range 34.2 all the way down to 33.3. Honestly, if it even cracks a hair below 34, hang on, 34.2, then yeah, I would be kind of raising an eyebrow on exactly what's going on. So if it can maintain support above 34.2, and we get a nice, again, this is a weekly candle close. This is a successful candle. Let me just point it out for you here. This candle, see this candle? That is a red control candle. So remember, guys, it's just a battle between two parties. This is a successful red candle to close. So that means that if the buyers are still here and they are in full control, it's likely they will find support at 34.2 and make a bullish engulfing counter move. And it will look something like this on the chart. Okay, weekly candles. All right. So hopefully I explained that well as in terms of what we're looking for in case there is some bullish activity going on in the market. To, just kind of, get all those guys rattled up out there like, I didn't see this coming. I never knew this would happen. Something's going on and blah, blah, blah. Okay. So the S-Dow, let's take a look at the S-Dow here. Previous close is going to be $30.85. Slightly positive close, 4% for the day. Okay. All right, let's back out here. I actually have a little bit of information on the S-Dow. Let's take a look at the weekly candles here. So here's my setup in terms of what I've been following. A lot of lines. 610-day resistance level, okay? Take note of that, guys. This is going to be very relevant when we zoom in here. So as you look at the price action, the 610-day resistance line, we just got to break through of that level. That's actually a bullish sign. Assuming that the open below or break below, right? That's kind of the assumption of the bullish case because the S-Dow does the opposite of the S&P 500. So if the S&P 500 is going down, the S-Dow is actually going to move higher, okay? So that's the reason why I have this right here, 29.5, open below or break below, okay? That is the bullish sign, okay, if the market does that gesture, okay? Open below or break below 29.5. Pardon me if I'm redundant, guys. I want everybody to get this, okay? So that explains the bullish case for the S-Dow. If the S-Dow just so happens to come down and find support at 29.50 and it continues higher, then yeah, man. Yeah, we just need to, just brace for impact, guys. That's it. Remember, we're playing musical chairs. It's just a matter of when. Okay, the markets will likely continue higher at some point, but if this is the end and the markets have topped out, that's fine. We're playing musical chairs. Just make sure you put your derriere on a seat, before the music stops. Okay. All right, let's get to the bonus. So hopefully we're all clear in terms of what to look for the bullish case in the market. All those levels, it's all there in the details. Last but not least, here's the bonus. So the iShares Russell 2000 ETF IWM is the instrument. $195.99 close, slightly negative 1.8% for the day. I actually found something pretty interesting on the Russell 2000. This is kind of my setup here, 3-day candles. It actually did a beautiful consolidation from the sellers for 365 days, actually consolidating within the $210 level all the way up to the $234 level, right? Just kind of bouncing around, consolidated for a full year, broke out, fake out, came back down, and now it looks like it's having an official breakout to the downside. Now, the $210 is actually the throwback. That simply means that, notice how it had a slightly negative close. If the buyers step in here and it takes maybe I don't know, like a week or two, that's just a hypothetical number, and it kind of turns around, right? And it pushes to the upside to like $210. And a lot of people get excited like, man, no, the guys are wrong, man. It's just still in a bull market, and it actually finds resistance at 210. What's happening is it's really simple. It's just finding resistance at the previous level of support as the sellers actually structured this very nice turnaround here within this range. And that's all that's going on, guys. If it actually moves higher here in the short term, just finding resistance at the previous level of support, which is all we go over if you're new, okay? Technical target for this is going to be $177. And that is pretty much all I have. The most bearish of them all is actually IWM. It looks super bearish, guys. Super bearish. All right. So that's all I have for you, wonderful folks. 177 is actually a conservative price target, by the way. That's the end of the video. Hopefully it wasn't too long. Hopefully you guys enjoyed that. Hopefully we're all clear in terms of what to look for. Hopefully you guys enjoyed the bonus. And we'll wrap it up here. So go ahead and support the channel before you go by leaving an appropriate thumb. I truly appreciate it. Below the video. Also leave a comment so that the YouTube algorithm can promote the video on the channel. Thank you for your support. If you guys are new, we also explored the alternative markets. If you're into Bitcoin and altcoins, you can kindly subscribe with us, hit the bell, and we'll send that out to you momentarily. Welcome in. I'd like to take this opportunity to thank you all for your time. Remember to always have a strategy before you enter. Keep that positive energy flowing. We'll talk soon, and bye for now, guys and gals.